Strategy 3. EMA bands plus zero-line pullbacks. For this strategy, we will need 4 indicators. We need the MACD and the 3 exponential moving averages. All 3 of them are 200 EMAs, but with different sources. The upper EMA is calculated on the highs of the candles. The middle EMA is calculated on the close, and the lower EMA is calculated on the lows. For TradingView users, you can use the moving average ribbon indicator. Just go to the indicators section and search moving average ribbon, select this indicator, and change the settings to the following. Once done, your chart should look something like this. Now, we have these moving average bands that will help us identify trade opportunities. When the price is trending, these bands will provide support and resistance to the price. In an uptrend, we often see that the price pulls back to these moving averages and finds support. Similarly, in a downtrend, the price pulls back to these moving averages and finds resistance. A point worth remembering here is that price will not always bounce exactly from the bands. Sometimes the price goes deeper before reversing. Now, let's combine this with the MACD and create a strategy. Here is a buy setup. The price made a strong up move here. The price stayed above the bands and the bands were sloped upwards. This is a sign that the price is in an uptrend. Then, the price pulls back to the EMA bands. Now, we expect the price to find support here and move upwards. We also see that the MACD line has crossed below the zero line. In an uptrend, we expect the price to bounce after the MACD touches the zero line. This is also a sign that the pullback might be over, and that the price may resume the uptrend again. So now, we have a confirmation of the MACD and the EMA bands. For our entry, we will not use the MACD line crossover. MACD crossovers are good for reversals, but they are not so good for pullbacks. Most of the time, they will provide a late entry in pullbacks. For a better entry, we will create a short-term trend line on the pullback and enter on its breakout. As you can see, the price made a strong up move after our entry. Here is a sell trade. We see that the price was consistently trading below the EMA bands and the bands were sloped downwards. This is a sign that the price was in a strong downtrend. Then, the price pulls back to the bands. We expect the price to find resistance at these bands and move lower. We also see that the MACD has crossed above its zero line. This also indicates that the price may start a down move again. Therefore, we have a confluence of the MACD and the EMA bands. Now, we create a short-term trend line and wait for the price to break it. On this candle, the price broke below the trend line. We enter a sell trade. As you can see, the price moved downwards after our entry. Now let's discuss the last strategy. Strategy 4. Swap zones plus zero-line pullbacks. If you trade support and resistance, you might know that the support and resistance have dual properties. This means a resistance level can become a support level after a breakout. Similarly, a support level can act as resistance after its breakdown. This is why we call them swap zones. They swap roles with each other. We will use this concept with the MACD to trade this strategy. Here we see that the price was in a steady uptrend. We spot this reversal here and plot a resistance level. Then the price broke above the resistance level. Therefore, the resistance level has now turned into a support level. When the price pulls back to the support level, we expect the price to bounce and move upwards. We also see that the MACD line is below 0, showing signs of support. We spot this doji right at the support level and enter a buy trade. And as you can see, the price shoots up and trades higher. Here is a sell trade. Here, the price was in a downtrend as it moved lower. This reversal point helped us identify a support level. Then, the price broke below it, turning the support into a resistance level. When the price pulls back to the resistance level, we expect the price to bounce. We also see that the MACD has moved above the 0 line. So, we enter a sell trade when we see this evening star candlestick pattern. And as you can see, the price moved lower. So this is how you trade using the MACD. In this video, we first understood the uses of the MACD indicator. Then we discussed 4 advanced trading strategies using it. If you want us to cover some specific topics, be sure to comment below as we appreciate your suggestions. Also, let us know what you think about this video. If you found value in this video, then be sure to hit the like button and subscribe to our channel so that you don't miss any of our new videos. You can also follow us on Instagram by clicking the link in the description below. See you soon!